welcome to Taking Stock, the show where we take stock of the week gone by and prepare you for the next trading week. It's going to be an important week. We kickstart the earnings season next week. I am Reema Tendulkar and with me is Anuj Singhal. In Friday's trades, the markets ended down close to about 0.3% as a slump in the IT stocks led by Visa worries dragged the Nifty below that 8250 mark. But for the entire week, as the Nifty rallied only about 0.7%, the mid-caps did quite well with a rally of about 3.5%. Anuj, in Thursday's trade, the market showed some amount of momentum, but that got thwarted in Friday's trade because of what happened with IT. What's the setup for next week looking like?
Yeah, so Reema, this is a market which in technical terms is contracting. It's not a market which is having follow through on either direction, on the upside or on the downside. In fact, the Nifty is refusing to break the 200-day moving average. For me, that was the key takeaway of this trade. The Bank Nifty is looking up, but the Bank Nifty single-handedly cannot take the market higher, and even that will give up if the market refuses to have any momentum. And of course, IT stocks have negated a lot of Nifty's, Bank Nifty's work, and the market is facing a bit of a leadership crisis at higher level. The point that you made about mid-caps, I think next week would be test of the mid-cap rally because so far the market is in a range, so the mid-caps are outperforming. Let's see if that can continue. But let's do one thing. Let's invite our guests. Joining us now to discuss market further is Aashish Somaiyaa, MD and CEO of Motilal Oswal AMC. Aashish, hi, good to have you on the show. First of all, Happy New Year to you and your team. I think we're speaking for the first time in 2017.
Yeah, absolutely. Happy New Year to you and all your viewers.
Guys like you, of course, have seen a lot of domestic liquidity, a lot of support for the market has come from DIIs. What's your sense in 2017? Will we see more DI inflows, more FI outflows, and market not doing much, or do you see a bit of a trending here?
So I think, the first 6 months are obviously going to be eventful because, like you rightly mentioned, we're getting into the results season, and then 1st February is the budget. And, typically people are a bit worried about results this quarter and the next one. My sense is that October, November, December may not be that bad because if you see the first 45 to 50 days was quite fine. For a variety of reasons, we actually saw a preponement of demand. And then when you see Jan, Feb, March results, that's where I think the full-blown effect will actually be seen. But by the time the March end quarter results come, people will be already talking about, election results and so on and so forth. So I think first 3-4 months are going to be volatile. As far as flows are concerned, I think it's pretty much structural in nature, because interest rates falling, owning real estate and gold being pretty uncool right now. And we are seeing sustained registration of more and more SIPs. So that's 4,000 crores a month right now. I can be pretty sure it will be over 5,500 crores by the time the year ends.
Okay. Well, that's good to know, considering we've seen an exodus of, FIIs away from the markets. But if someone's a new investor in the markets and they've said that in 2017 we want to start investing, what would be the positioning that you would recommend in your portfolio, in their portfolio, considering that we have the earnings season and the budget in 1 month?
So these are tricky times, but if you really ask me to take a call, I would say that January is probably a good month to start investing.
Okay.
And that's linked to some of the reasons I told you, because, it's very well expected that the budget, the government is going to become a big spender or a big investor in the economy. The second thing obviously is that there's a huge collapse in interest rates and very high liquidity. So my sense is that January will give you opportunities to invest, but once the budget and the election results are out of the way, you're looking at a completely new zone. That is my own sense. So I would tell people not to keep postponing.
And in terms of a sectoral approach, how much in BFSI, how much in IT, pharma, etc.?
So, our house tends to be pretty bottom up, because we start with our own filters in terms of we are typically high quality, high growth, buy and hold kind of investors. So we don't end up doing too much sectoral work, but my sense is that, stuff like banking and financial services would be there, non-banking finance companies. We're not so much into the microfinance end of it, but definitely consumer finance. We are pretty heavy as far as, let us say, autos are concerned. The other sector which we find a good amount of exposure is pharma. So these are the high quality areas that we are actually concentrated in.
2 days back I was having a chat with Gautam Sinha Roy, of course, one of the fund managers. The interesting bit which stands out is that you have a lot of auto names in your portfolio, and of course, the outperforming ones, the likes of Eicher and Maruti. Do you get a sense that some of these stocks have put the demonetization woes behind them, and say, for example, for say Maruti or Eicher, we could actually see lifetime highs pretty soon?
So I would honestly, I would wait for Jan, Feb, March to get past. I would wait for another quarter to actually sort of declare victory, if you were to call that. But yeah, we know that a lot of these sectors, they are also getting tailwinds from stuff like the pay commission, and plus they are also seeing financing. Bulk of it is financed as far as Maruti is concerned. So if interest rates are low and there is so much liquidity, pretty much now you'll start getting desperate phone calls for you to take a second car and a third car and a second home. So I think that will be a tailwind for sure.
Okay. You spoke about, the financial space where you have an exposure. This week we saw very steep rate cuts by State Bank of India, and it was followed by the other PSU as well as private banks and the NBFCs. State Bank of India, HDFC Limited, etc. were under pressure this week. How did you read this news?
So I think clearly, if you see from their perspective, if you see from demonetization announcement till now, huge distraction. We ourselves deal with banks, so we know there's been tremendous distraction. So in a sense, you can say that a derailment from their normal efforts as far as business is concerned, NPA recoveries, etc. are concerned. So that is one derailment clearly. Second is obviously you're flush with funds and there's no credit offtake. Right, and there is going to be pressure on the margins, so no debate about it. I think they will have headwinds for some time to come. In fact, on the other hand, if you actually see what has started flying is NBFCs, right, because they tend to borrow from the banks. So I think that's a bit of value migration there. At least from a near-term perspective, that seems to be a trend.
So that's the trend.
So NBFCs may outperform the banks?
Yeah, you can clearly see it actually. Let's say you take an example of a Bajaj Finance, for instance. In the last few days, that is what has actually benefited, whereas the traditional banks have been under pressure.
Okay. One of your top holdings is Infosys. Now, what we saw on Friday, of course, was another headwind. Not that IT companies needed that, but do you get a sense that we might be in for really tough times? So do you think the stock price now is factoring in the worst, or maybe at 900 will factor in the absolute worst?
So it's not so much only about the visas.
Okay.
So if you see, even before Mr. Trump came in and this element of, or a fear of protectionism came in, and even before the talk of visas, any which way we are all looking for a more like a business trend change. How many of them are transitioning into the next era of so-called IT services? So I think it's more about having confidence in a bunch of companies which will make the transition, and another bunch which may or may not make the transition. So I seriously think it's more to do about that. It's too early to get jumping about what actually will happen on the visa front. We'll have to cross that bridge actually when we get there. So people are watching more for the business model change rather than anything else, if you ask me.
Okay. Do you think the market is accurately pricing the earnings right now, or the earnings downgrade cycle is still not ended?
See, you look at it in very, very oversimplified terms. We were at about 18-19 times forward, and we are now say 16 times forward as far as Nifty is concerned. So why I said oversimplified manner, you pretty much knock down about a year and a half to 2 years of earnings. That is what it would translate into. I don't think that anybody has ever come with a prognosis saying that we are going to lose 1.5 to 2 years of earnings. Obviously, some sectors will do well and some will do badly. But my sense is, yes, the market is factoring in a lot of the bad news. And leave aside the market, there are many good stocks which are down by about 30% or so, depending on which sector you're talking about. So I would say, yes, the market has factored in the worst. And like I mentioned before the next quarter results, which are likely to be equally, going nowhere, before those really start, the attention of the market will be more on what came in the budget and election result and the fallout of all those things.
Okay. The other interesting bit of this week was that we saw some stocks, gaining ground where the businesses are okay, but the balance sheets have been broken. And the call is that this year could be about balance sheet repair, or at least interest costs coming down. Would you subscribe with that view, and would that be a good space to enter?
So doesn't fit into our framework really, but everything that benefits from because you're going to see a phase of seriously low interest rates, and you're going to see a phase where credit offtake is not there, so there is competition for actually giving money out. So from that perspective, definitely it helps. It doesn't fit into our framework purely because we don't look at these 6 month, 1 year kind of trend changes. That's the whole point.
Okay. There have been no changes that you made in your portfolio in the last, say, 1 month? And if yes, if you could tell us the changes and why?
So actually no change in the portfolio.
Okay. Since demonetization then?
And I'll tell you the reason why. It's not that we're not trying to say that, it just doesn't matter. Of course it matters. You can see what's happening in the market. But if you really ask me, I'm happy we didn't make too many changes, because whatever the prognosis on 8th November was actually, all of it has changed and been proven wrong subsequently week by week. Let me explain. On 9th November, most people would have said, let's buy banks. Real estate is wiped out, consumption is wiped out. That's what the original story was. And from there on, every week that mood has kind of changed. Where we are sitting right now, people are saying that, whatever is consumer non-discretionary or staples will bounce back when the cash circulation improves. People are saying that banks are in trouble and NBFCs will actually do well because they borrow from banks. A lot of the auto, it's a dispersed kind of performance. Not everything in auto got smashed out. So what I'm saying is that, it was uncharted territory. Nobody knew exactly how it will play out. And just because a particular news comes, we believe more in gauging how things shape up and then trying to, because we are reasonably strategic investors. Our holding periods are typically 3, 4, 5 years on a particular stock. So while it might surprise a lot of people, but there are no dramatic changes in our portfolio in the last 2 to 3 months.
Okay, last question. I know you are a bottom-up stock picker, but what are the odds that this market makes a new high in 2017?
So new high means we got to be well over 91, 9200
Yes.
Kind of number. I won't rule it out for sure.
You won't rule it out. So
rule
can
it
see 10, 12% index returns as well.
Yeah, because one is that there are definitely pockets where one will be able to invest, number one. Number two is we are starting with really, really low expectations.
Okay.
The third point is that there are trends which we discussed, right? Because liquidity is high, interest rates would be low. Government will definitely be a big investor as far as the economy is concerned.
Sure.
There are certain sectors which will win because you'll see movement from unorganized to organized. And lastly, I'm very confident about subscription from domestic investors. I think that's on the rise.
All right, Aashish, it was a pleasure talking to you. Thanks a lot for dropping by to our studios.
Thanks
and
for
have a good year.
Thank you. All the best.
So that's the bullish view from Motilal Oswal AMC. We'll take a break on that note. But before we do that, let's hear out some market opinion that we got all through this week.